Welcome to Market Lens for Tuesday, June 30th, 2026. Today's market map is split. Emerging markets, Japan, and real estate sit at the top of the opportunity ranking, while crypto and China equities remain the weakest areas. U.S. equities still have AI and tech support, but volatility is elevated and leadership is uneven. The key question today is whether global risk appetite can broaden, or whether oversold pockets simply keep producing unstable rebounds. The opportunity ranking shows a clear divide. Emerging markets equities, Japan equities, and real estate each carry a score of +2, supported by uptrends and normal volatility. Metals sit in the middle with mixed signals, while Hong Kong equities remain sideways. U.S. equities fall below neutral because the market is mixed and volatility is elevated. At the bottom, crypto and China equities remain in downtrends, with deeply oversold conditions but higher risk. Emerging markets equities rank first today with an uptrend, normal volatility, and an opportunity score of +2. The setup is constructive because VWO is slightly above its 50-day average and comfortably above its 200-day average, while still staying near trend rather than becoming stretched. That combination points to a steadier profile than many other asset classes. Tailwinds include constructive international equity demand and ongoing interest in Asia-linked technology supply chains. The main headwinds are familiar: a stronger US dollar, higher global rates, or renewed China-related growth concerns could interrupt momentum. Bottom line, emerging markets remain one of the cleaner setups in today's market lens, but follow-through still matters. Japan equities also carry an uptrend, normal volatility, and an opportunity score of +2. EWJ remains above both its 50-day and 200-day averages, and the index is near trend rather than extended. That gives the setup a balanced quality, supportive but not overly stretched. AI-linked industrial demand and semiconductor exposure continue to help sentiment, and currency weakness can support exporters. The risk is that sharp yen moves or central bank tightening expectations could create cross-asset volatility and pressure valuations. Bottom line, Japan remains favorable within the current ranking, with a steady trend but meaningful policy and currency sensitivity. Real estate holds an uptrend, normal volatility, and an opportunity score of +2, but the details are more mixed than the headline score suggests. VNQ remains above its 50-day and 200-day averages, yet its latest 1-day and 5-day moves are negative, and it is only slightly above the 50-day trend line. That means the uptrend is intact, but not especially strong in the short term. Normal volatility is helpful because the pullback has not looked disorderly. Tailwinds include stable income-oriented demand and stronger specialized property areas. Headwinds remain elevated financing costs and refinancing risk. Bottom line, real estate is still constructive, but rate sensitivity keeps it fragile. Metals sit in the middle of the ranking with a mixed trend, mixed volatility, and an opportunity score of +1. Gold is in a downtrend with elevated volatility, while silver is sideways but highly volatile and very oversold. This creates a two-way setup. Oversold conditions can fuel sharp rebounds, but the broader trend profile is not yet convincing. Precious metals can still benefit from defensive demand when inflation or geopolitical uncertainty rises. However, restrictive rate expectations, dollar strength, and weak positioning versus moving averages remain important headwinds. Bottom line, metals offer tactical rebound potential, but the overall signal remains mixed and choppy. Hong Kong equities are sideways with normal volatility and an opportunity score of +0.5. EWH is oversold and below both its 50-day and 200-day averages, so the setup has limited directional edge. Normal volatility helps keep the range relatively contained, and there are some supporting forces, including interest in Hong Kong listings and China-linked technology activity. But the main challenge is that the market has not confirmed an uptrend. Property weakness, cautious China sentiment, and soft domestic demand continue to weigh on confidence. Bottom line? Hong Kong looks more like a stabilization watch than a clear leadership area. U.S. equities show a mixed trend, elevated volatility, and an opportunity score of -0.5. The headline index picture is still supported by SPY and QQQ, which remain in uptrends and above key moving averages. But beneath the surface, GOOG and NVDA are sideways, and NVDA carries high volatility. AI infrastructure spending and semiconductor momentum remain major tailwinds for market sentiment. The challenge is that expectations are high, volatility is elevated, and restrictive rate expectations can pressure high valuation growth stocks. Bottom line, U.S. equities still have leadership strength, but the market is less balanced than the surface may suggest. Crypto remains in a downtrend with mixed volatility and an opportunity score of -1.5. Bitcoin and Ethereum are both deeply below their 50-day and 200-day averages, which keeps the overall setup fragile. Bitcoin has elevated volatility, while Ethereum has high volatility, so drawdown risk remains meaningful. The one offset is Stretch. Both assets are very oversold, and Ethereum's 5-day change is slightly positive, which can create room for sharp counter-trend rebounds. But those rebounds may be unstable if liquidity and risk appetite do not improve. Bottom line, crypto is deeply oversold, but the primary regime remains high risk. China equities rank last today with a downtrend, normal volatility, and an opportunity score of -1.7. MCHI is below both its 50-day and 200-day averages and remains oversold versus trend. Normal volatility suggests the decline is not disorderly, and oversold conditions can support short-term rebound attempts. There are also pockets of relative support from high-tech exports and AI-related manufacturing demand. But the broader picture is still weighed down by domestic demand concerns, property sector stress, trade uncertainty, and negative 5-day momentum. Bottom line, China equities may bounce from oversold levels, but the trend signal remains weak. Go beyond the highlights. Get the full Market Lens report in your inbox. Powerful AI-driven insights on global markets, critical news, risks, and opportunities to help protect and grow your money.